the Nasdaq 100, the S&P 500, and we weren't able to go in detail yesterday, but we said one thing: the pause was in, the bulls were in control. Now, a few of you guys may have been a little shell shocked with a little bit of a dip that we had, but ultimately they showed back up. So let's go over where we're at right now. You can see we're back at March highs of 2021, not even last year, this 2022. So this past year, sorry, misspoke there. Understand that massive level here. And I honestly believe right now, like, you're now in the realm of talking of all-time highs on the Nasdaq, possibly the S&P 500, to get tested. This is a real conversation we're having here. Now, we have a lot to go into detail about this, but we had an overall expectation based on the information that we had at hand. Now, there's some massive plays as well in this market that we need to be talking about because, again, opportunity is going to continue to arise. But again, you need to, keep your head on a swivel. We got some big things coming. Now, before we get into that content, I ask you to consider doing two things. Liking and subscribing helps out, but only do that if you think you get something from the video. Again, we appreciate it. Also, too, if you're interested, the Discord link is down below. I never want people to feel like they need to join Discord to get signals, to make money instantly. It's not like that. Discord is a place for people to be around like-minded individuals that are trading together with you, but also to teach you what we're doing as well. So I never want people to think that you're just jumping in, taking signals. If you go into it with that mentality, you're gonna get nothing out of it, and you're gonna leave after 2-3 days. People always say we need more signals. It's not about more signals. It's about taking better and higher quality trades and learning how to win no matter what. That's what we try to focus on. Okay. Now, really quickly, we're gonna just go over the Nasdaq. The Nasdaq, overall, what have we been watching? You remember this April highs we talked about, 14.3. The next level was around 15.25 on the Nasdaq specifically. Now, when we zoom here, this is the daily time frame. You can see though, right? We had that double bottom at that April level from 2022. We pushed above, and now we're at the highs of March. Okay. Now, there's a few things that I want to talk about before we really get into the charts here. And it all comes back down to what's moving the market and this momentum behind the market as well. And again, maybe, the past few videos are a little cocky, whatever. I'm really trying to have a little fun, guys. Talking about stocks and finance can be a little daunting and maybe not the most fun topic at some points in time. So I like to enjoy the process here and give it to you in a kind of an entertaining way. But when we look at what happened from Powell, when we look at what's happening from the Fed, the debt ceiling, etc., I'm just telling you, short term, the reaction you're going to get. And this is what it is. They did say that they expect and could still do some hikes down the road, but they have to say that. It's what we talked about before. The whole point of pausing now is to let the rates do their job, right? Let all the stuff that they apply to the market try to work, right? And then if they don't, if inflation persists, you raise rates more, okay? But we're in that middle phase to where we don't have bad information yet, and this pause just started. Now, when we look at the pause and things along those lines, the area we said you need to be watching for are yields, specifically short-term yields. The 2-year, the 5-year, the 10-year, and 30 is 10 and 30 obviously longer dated ones, right? Now today we saw, one of the few red days on the 2-year downside, the 5-year pushing down, the 10-year pushing down. And I also want you to notice here your 200 MA as well on the daily, right there on all of these. So again, what you want to see for that risk on mentality is these yields to start heading down. If yields start heading down as well, this is going to be good, in my opinion, for some of the banking sectors that may have had some bad bets on, some of the higher dated yields. Okay. So again, this is what we wanted to slowly start to work in and happening. You also saw the 10 versus 30 year started coming back down as well. These are all things we wanted to see. A lot of people have been talking about junk bonds and why are we not talking about those? We can. Okay. Now, I'm under the impression that one of the last things you're going to see in the market to really bounce to solidify a bottom is going to be junk bonds. Why? Because they're like the riskiest asset in the market. But if you look at what's happening here with junk bonds, you've been getting back above the 200 SMA. HYG, you can look at J and K. They're all going to move essentially the same. A lot of people like HYG because it's more liquid if you want to trade it. But anyways, you can see you've been in this downtrend. You're breaking out of it, and you're mounting the 200 once again. And then the weekly is way up here. So again, junk bonds don't look bad necessarily either. Okay. And then also too, following it up with the DXY, continues to get rejected from that trend line like we mentioned. We continue to say this is a clear descending triangle. It wants to push down. The dollar wants to drop. Dollar drops. Risk on comes back into effect as well. So again, it's like everything's kind of lining up in our favor. I'm just saying, like I'm going over the same stuff over and over here. VIX as well. If we go into VIX, sorry, I can't type VIX right now. If you look at VIX, it's trending at lows, exactly what you want to see. It did this in 2021, 2020 when you were at all-time highs. This is what VIX was doing. Okay, it's the same thing. So it makes sense of how we're moving. And I want to cover that before we go into the Nasdaq. Okay, because those things are fueling what's happening with the Nasdaq right now. We saw a mass exodus of shorts, in my opinion, which we covered a few weeks ago when we broke above 4,200. I think 4,200 was that wall that we had to break. And once we did break it, I think it was nothing but good news after that. Now, I'm going to tell you right now, do I expect overnight tomorrow for the Nasdaq to break this massive level 1525? It's a massive, this is like your last, this really is your last resistance, right? Like this is like the last stand for shorts, right? But honestly, I think the everyone's saying you're still in a bear market. I'm like, I mean, guys, you broke out. We're 10% away from highs. I don't know what else we want to see here, right? So that's where we're at right now. Again, though, I believe you're now in the process of working your way into around 15.7, 15.8, give or take. You could really give yourself some wiggle room. I was kind of sitting here debating where I wanted this before I started the video. And I'm going to tell you exactly why I'm kind of marking it out this way. I think you're going to have a few areas. One, I do think the previous highs you had back here in August of 2021 are going to be big, but they kind of line up as well right there with the kind of where you found support here when you made new 52-week highs here as well on the Nasdaq. You pushed up, came down, pushed back up, end of December, and then you free fell, right? It went straight down. So on 15.7 is where I'm targeting us to go to. Breaking 15.7, breaking this level, I have you pushing to all-time highs on the Nasdaq. Absolutely crazy to say, but that's the level I'm watching. If we get above that level, it's a slingshot in my opinion. Okay, ES, what's happening here? Obviously, you have a little bit more room to go in ES. It's not as, I mean, it's close. It still looks really good. Don't get me wrong. I mean, it's fantastic, but you have a little bit more room to go. Again, you can see those, previous August highs, 2021. Trying to mount over it, a few more wicks there. But again, around 45, 50 is that range that I'm watching. You have a few smaller levels in here. But again, these are the big boys because I want to focus on the big levels to where, if this happens, you're most likely getting that big breakout, the massive follow through. Similar to 41, 4200 down here, right? Once you broke, retested, it was over, right? That's all you needed to see. So that's what we love. That's what I'm watching vigilantly here right now. But it makes sense to get a little bit of a pullback from where we're at, okay? Now, I want to say this. Even though I might expect sellers to show up, I am not trading the downside here. Why? Because the trend in the market has continued to tell us one thing. We are bullish. Continuation. Upside. Buyers clearly stronger than sellers. Sellers cannot push us through any major support. They cannot follow through. They cannot stay in the game for more than one or two pushes at a time. Buyers are the one giving us the continuation, giving us all the money to be made, right? That's been the story of the year so far. So I'm not going to go against buyers because I'm going to create in my opinion, a statistically more likely chance that I'm going to lose money and not even have the same reward potential as in trading the upside. Okay. Hope that makes sense. If that doesn't make sense, I would love to comment and explain the logic there. So comment down below if you have any questions on that as well. But that's what we're looking at right now. I still think you have some room to go. But again, I think you have a little bit of a resistance based on where we're at. We've hit some massive targets. If you're in the newsletter, link is down below. Then you saw these levels as well. Okay, so make sure you're paying attention. You're not FOMOing in here either. Again, I always tell you guys, when you get these breakouts on something like ES, the Nasdaq, whatever it may be, right? This isn't necessarily the time to buy when you're at 44 to 44.30, right? At highs. The time to buy is when you get these retests, okay, over and over and over again. It happens and it happens and it happens. Okay, you're going to consistently get these, right? The time to buy is on supports, is where you assume buyers are going to show up. I think Google gives us a great instance of this. Google, I've been saying for the past few days, it's one of my favorite names. I keep trying to show you guys opportunities in the market that I'm liking, and Google, I think, is one of the best. Today I wasn't able to be in Discord. I was traveling back home today, but Jay mentioned a fantastic trade here today. So this morning, we were talking a little bit this morning, and then it was funny. He entered right after we talked about it, so I was like, awesome trade. I love it. So he ended up getting some dated Googles, the 130 calls here. And just a matter of time, these are dated for October. They already went up almost 20% by the end of the day. But you're buying these down here at support, 122, 123, where you've been holding for days and weeks. Now, Google, also too, you look at this big picture, it's, one of the top 10 biggest stocks out there. And guess what? You still have plenty of room back into all-time highs. Even Amazon, so another big name we like, it's making a bit of an ascending triangle here for some continuation. It's looking like, right? Just really quickly drawing this out for you. As you can see with a little bit of a false breakout that you had right there at highs. Boom, false breakout. But it wants to continue, right? We also know 200 SMA is sitting near 132. So there's opportunities out there. Like if I like semiconductors, I don't want to, NVIDIA, I kept telling people this is still, you love it here, bouncing. But even if you don't want to go on NVIDIA, maybe you go to something like AMD, which we called again in Discord at around 119, and we called it on Twitter. So you have these opportunities. You just got to be looking and finding those, the best opportunities for yourself. And we continue to mark these out and talk about them. So today I don't want to mention, 10 stocks I'm loving, 10 stocks, I'm hammering, right? Because we had a great, we caught a lot the past few days and weeks. We caught Tesla, we caught Amazon, we caught AMD, we caught AVGO, we mentioned so many times, and Boeing getting above the 200 SMA. The list goes on and on and on. So we love what we're seeing. We love the opportunity arising. But again, I just got to instill one thing right now, and that's just patience. Don't be so focused on, I have to make X money a day. I have to make 5 trades a day. I have to win. Understand, sometimes if you're not in a trade at these high levels, it's best to represent one of the best positions you can, cash. Because when you sit on cash, you give yourself the opportunity to get back into place. So if you watched, for instance, yesterday's video, and again, I wasn't here in the office, but I was saying that I believe there's no reason to be bearish. You're full bull, right? So today, I think you had opportunity out of the gate. 8:30 a.m. Let's go back to where that is. Today you're sitting down here. You open up around, below 15,000, and you move up 200 points to the upside. So you have that opportunity after the dip that you had too, right? And we were expecting this. We were planning for this. And, the day before the Fed even announced the rate, I think it was Tuesday, go watch that video. I said, look, if they pause, you're pumping, right? No doubt. Any dip there is a buying opportunity. And that's not cocky or conceited. That's just having confidence in the plan and the map that I lay out for myself and how I'm going to trade, right? Why do we have that confidence? We have that confidence because we've been doing and practicing this over the past 4 or 5 months since January, right? Stick to the plan, have an overall plan as well. So if things go bad, they go well, they go according to what you assume is going to happen, how you're going to trade that, how you're going to navigate that market, know when your stops are you're going to set, when maybe you start taking profits based on futures hitting certain levels, and overall sticking to that and not just shooting from the hip. That's when I notice my trades go the worst, is when maybe something happens that's unexpected, and instead of reevaluating my plan, reevaluating my strategy, I just jump back right in. I look at the chart, I find something, the first thing I like, and I buy. And that's where you maybe show the chink in your armor. That's where you enable yourself to maybe get kill shot, right? You might hit an artery, right? You expose your portfolio, you expose your account. The name of this game isn't win immediately, win in 1 year, become a millionaire tomorrow. The name of this game is survivability. Can you withstand the downside and thrive when the markets are good? Right now, yes, I think you should be surviving. But your number one goal has got to always be to be able to survive in this market, right? I can go on a tangent of how many traders I've seen that, oh, I blew up my account and it's over. You should never get to the area or the point to where one trade can blow your account up. And I believe, even though I love this movement, this upside, that we're getting to that point to where some people may start exposing themselves to where they can blow their account up. So I say this, focus on letting these opportunities come to us once again, and focus on being patient right now, guys. Don't just be rushing. Don't be FOMOing in. I guarantee you, if there's one thing the market's taught me over the past 5-6 years, another opportunity will show up again and again and again.